Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. Today's video is going to be going over these standard deviation projections, right? These are a great way to frame reversals from, have price targets directed to, whatever you want to use these for. I'm just saying this is a great tool to use, right? So this is going to be your standard deviation projections right here. These are the settings. You want the -2, -2.5, where you can put these in however you want. They're always going to align, but these are the settings you want checked marked. These are the numbers you want. You can change the colors however you want. I also have the background completely off so it doesn't look like this, like that, or like, yeah, however you want to do it, you can do it however you want. Okay, so this over here, there's two ways to use this. The higher time frame standard deviations, which would be on the 15-minute chart, or the intraday, which could be used on the 1 minute, the 5 minute, the lower time frames that we use intraday, right? So let's take a look at this higher time frame standard deviation first, right? So we have midnight opening here. That is going to be where you want to see the standard deviations projected from. We want to see a manipulation above midnight open if we are bearish for the day into a key level, and then we are going to use that manipulation leg. We're going to measure from this low to this high, and it's going to give us our projections, right? So right here you can see that we come down into -2 and 2.5. Now there's two things that can happen here. It can either just go straight through and not respect it at all, or it will respect it and return to equilibrium of the dealing range, right? Oh, I was close. It can return to equilibrium of the dealing range and then continue, or it can be a straight reversal, right? It depends on your bias for the day, what we're delivering from, right? But if we get to equilibrium and we continue, where can we look to next? Down here at -4 and -3.5. These are the two that can be the max expansion for the day, right? So let's go over to intraday standard deviations, right? This is going to be on your 1 minute, 5 minute, so on, right? So right here, let's just say that we have an accumulation, and then we manipulate beneath an old low, and then we displace higher, create a breaker, CISD, whatever you want, and then we continue, right? So you measure from this high to this low. -2, 2.5 is going to be your first price target. Now if we want to respect it, where can we go to? Either an imbalance, right? We're going to reprice into an imbalance, but if there isn't one here, we can then return to equilibrium of the dealing range, and if we want to go higher, we will go back up to here. Now the intraday standard deviations don't always need to be your max expansion, right? So let's hop into the charts and I'll show you guys some examples of these standard deviations playing out. All right, so here we are on the 15-minute chart. Okay, so what do we see right here, right? We see this 15-minute fair value gap, and if I can draw this, okay, so we see this 15-minute fair value gap right here, right? So higher time frame key level. What time frame alignment is this going to be in line with? The 1 minute chart, right? So if you don't know what time frame alignment is, go watch my previous videos on it. I have a video of it sometime recently, so go watch that if you don't know what it is, right? So right here, we have this 15-minute fair value gap. What do? We reprice into it, right? And we have these like equal lows kind of right through here. And what do we see here, right? We see a low swinging into that 15-minute fair value gap, right? So we measure from this high to this low. And what do we notice, right? Come down to -2, 2.5. Now, if we are going to reverse, the thing you need to understand is a turtle soup will occur if we are going to reverse. So what do we see here? We see a turtle soup and then displacement higher, right? So what can we do? Measure from this low to this high, and what do we see? We tap negative, oh wow, we actually do tap -2 to almost the tick, right? So right there is -2. We come up, tap it. Now, what can we do? We can measure this one, right? And what do you guys notice here? We absolutely run through -2, 2.5, right? We reprice into this miniature fair value gap and run the lows, which is -4 right here, and then we close, right? So right here, you guys see these standard deviations. And once again, -2, 2.5 usually will line up with sell side. And right here on the lower time frame, you guys can see that, right? Right here, 3 and -4 kind of come down here, but not quite. So I just gave you guys 3 examples in this one little example that I was only going to do from over here. Reprice into a 15-minute fair value gap, high to the low, -2, 2.5, turtle soup, displacement, high to low, or low to high, reprice to -2, chop around a little bit, and then we rip down to these lows down here. So let's go look for another example on this lower time frame. All right, so here we are on the 15-minute chart once again. Right, so what do we see right here? Right, we see this 15-minute order block, right? Why is this an order block? Reprice into a fair value gap. So we have this 15-minute order block here, right? Negative OB. Then what do we have right here? Right, we have an old 15-minute swing high. So this is going to be your buy side. So let's go down to the 1-minute chart. Now, what do we see here? Okay, let's move this over. All right, so what do we see? Right, we come up, make a swing high, we have a swing low, and then we have displacement lower. Okay, so this is going to be your manipulation leg. Now, what happens here? We come down to -2, 2.5, chop around a little bit, and if we are going to respect it, where are we going to go? Equilibrium of the dealing range, right? So what do we see here? Accumulation above equilibrium, and we take out a 15-minute swing high, right? So what is this? This is your manipulation standard deviation projections, right? So what happens here? We disrespect -2, 2.5, fill out an imbalance, continue down to -4, and then we chop around, right? I don't know if we continue here, but we can find out. Nope. So what did I say? Take a look right there on the 15-minute chart, right? The 1 minute obviously is going to have some invalidations, but the 15-minute chart, all bodies respect -4, right? And 5-minute just absolutely chops there, right? So that is another 1-minute chart. That is another example right here. Come up into an order block. We kind of accumulate in that order block. We don't take out this swing high, so this is your manipulation here. So we displace lower, -2, 2.5, reprice the equilibrium, take out a 15-minute swing high. This is now your new standard deviation leg. All right, and then we go down to -4 and chop around. Right now, I wonder if there is an SMT there, and we could measure this out. Right, I don't know if we get up there. No, we don't. Right, but anyways, right there is 2 more examples on this lower time frame chart. All right, so here we are on the hourly. This is going to be the last example on the lower time frames. Then we'll do a couple of midnight opening price. What do we see here? Right, we take out an hourly swing low, close back inside the range, and we have equal highs up here. Right, so what is the time frame alignment with that? The 5-minute chart. Right, so let's head down to the 5-minute. What happens right here? Right, inverse fair value gap. Now, what happens whenever the standard deviation leg is this big? Right, the thing that I do is if it's this big and we get choppy price action afterwards, is I will measure the swing low to the swing high before the expansion higher. Right, this is your expansion. Right, so this low to this high is what I would measure. Right, because this is the swing high, swing low before the expansion. So that is going to be the highest probability swing point. Right, so what happens here? Come up to -2, 2.5. What happens after that? Remember what I said. We can reprice into a fair value gap, and if we are going to respect it, we will not return to equilibrium. Right, this would be your equilibrium price down here. Right, and if you wanted to measure it from here, it wouldn't even hit it there. Why? Because we have an imbalance here that needed fulfilling, and then we can continue. Right, so this is one of those cases where -2 is respected and we reprice into a fair value gap. Right, so let's go to the 15-minute chart, and I'll show you guys some examples of midnight open being the standard deviation leg. All right, so here we are on the hourly time frame. What do we see right here? A 1-hour fair value gap. Right, so we have this hourly fair value gap, and I already have midnight open marked off. So let's go down to this time frame. Right, so what do we see? We have midnight open right here, and we make a oh wait, this is the 5-minute. Right, midnight open swings into that 1-hour fair value gap right here. Right, and then we displace lower. Right, 15-minute fair value gap. This gets inverse, tap into that, and we continue. Right, so this is your manipulation leg at midnight open. So we measure from this swing high to this swing low. What happens? come down to -2, 2.5, and then we come higher, right? And we never retake this low. ES might have informed an SMT, but either way, you guys see how I was able to project, right? I don't even know if there's a higher time frame key level here. There's not, I mean, this swing low, but we never got there, right? So you guys see, if you were confused on where price was going to go after this displacement, this midnight opening price manipulation can be used to project your price targets or where we can reverse from, right? So let's go find a couple more examples. All right, so here we are on the 15-minute time frame again. Where do we see midnight open? Right here. Let me get that. Midnight open. What do we have right here, right? We have a swing high, right? And this is probably a higher time frame fair value gap, it looks like. Yeah, 1 hour fair value gap there. Is it a 4 hour? No. So a 1 hour fair value gap there. Now, what do we see happening right at open, right? We purge that and we're above midnight open, right? So we're above midnight open and we purge that high. So this can be your standard deviation projection, right? So midnight open or 9:30 purges that high in that 1 hour fair value gap and goes straight lower. There's probably a 1 minute setup within here, right? Comes lower, disrespects -2, 2.5. And then we rebalance this candle, right? This is definitely fair value gaps within there. And then where do we continue to? -3, -4, -3.5, -4, right? Then we come higher, and then there's probably a manipulation leg within here, and then we continue lower, right? So what happens once we get to -4? We don't really move, right? I mean, it did go below and close below, but you guys see how you were able to project the price projections from this manipulation leg, right? So let's go show one more example of this. You can find this relatively easy. You just need a higher time frame key level, and right here, I mean, we probably could project this. We get close to -2, but I'd probably use this swing low, right? This swing low purges up into these highs throughout here, comes down to -2, returns to, that's probably close to equilibrium, if not equilibrium, right? Boom. Yeah, that is equilibrium. We chop around at equilibrium after getting to -2, 2.5. Where was your midnight open? Right here, right there's midnight open. Comes up, comes back down, taps it, continues higher. We have a swing low, swing high that purges these highs. There's maybe an SMT there, but let's go look for a good example for you guys. I just was scrolling through and saw this. All right, so here we are on the last example, 15-minute time frame. What happens right here, right? Midnight open opens up, right? And what happens at midnight open, right? We come up and we purge these highs right here, right? So we come up and we purge buy side straight up through here and displace lower, right? So what is the manipulation leg? And right, you can see this is accumulation. Midnight opens, power of 3, manipulate, distribute, right? Measure from here to here, okay? So what happens? We displace lower, purge this high. This is a higher time frame fair value gap. Could have found an entry within here at open, come lower, disrespect -2, 2.5, and then we tap -3.5 right there. Then we get to -4 over here after repricing to what? Equilibrium, right? So these projections can be used from one day into another, right? Because you guys see that we hit -4, right? We get a little below -4, and then we absolutely reverse. But these can be used separately on different days, but I would recommend just using them for that day, right? So this is how easy it is to set up your standard deviation projections. This is how easy it is to find the manipulation leg and trade from it, right? I mean, it's super simple. Probably right there, right? If we go down to the 5-minute, maybe I lost it. Nope. Oh no, this is too big. Right there. -2, right? This is how easy standard deviations are. I would recommend using them because it's just an easy way to gauge where price could go, right? So I hope you guys enjoyed this video. If you are not in the free Discord, go join it. It is the first link down below. Other than that, I'm going to get out of here. Also, these are just really fun to mess with, right? Because you can project where price is going if you have a clear draw on liquidity and the standard deviations line up with it, right? So either way, I'm getting out of here. Hope you enjoyed the video. I'm out. Peace.